Why am I buying Bitcoin right now? It all started for me back in May when I was hearing news of the Bitcoin halving event in the various personal finance and investment circles which I was part of. So I've been spending a lot of time researching Bitcoin and various other investment opportunities over the past 6 months. And since then, for a myriad of reasons which I will describe in this video, I have a firm belief that Bitcoin is a good investment in both the short term, 6 to 12 months from now, and the long term, 10 to 15 years from now. Keep in mind, this is not financial advice. I am not a financial advisor, and the contents of this video are entirely my own opinion based on my own research and my own beliefs. This video is for informational purposes only and should not be considered nor taken as financial advice. So why do I think we are looking at a potentially bullish upcoming year and decade for Bitcoin? Let's start off with a historical look. Back in May of 2010, the first ever Bitcoin transaction occurred, where a man from Florida was willing to pay 10,000 Bitcoins for a couple of pizzas. The estimated cost was $41 for those 10,000 Bitcoin. So 10 years later, in May of 2020, Bitcoin was hovering around $9,000 per coin, which means that those $41 turned into $144 million. This is where I realized the insane rates of return over the past decade on Bitcoin. So I crunched the numbers and did some math, and my very conservative estimate is that if Bitcoin over the next decade does 1% as well as it has over the past decade, then if I invested $100 today, I could have $3.5 million 10 years from now. So to me, a $100 gamble that Bitcoin does 1% as well in the next 10 years as it has in the past 10 years for a potential payout of over $3.5 million is well worth the risk. I've spent more than that amount of money in a month eating out at restaurants, and I've spent more than that going out on weekends. And at this point, it was May. We were more than a month into the pandemic lockdowns, and I hadn't been spending money eating out at work because I hadn't been going to work. Why not put that money that I've saved and eating out at the office into this new investment that could get me these phenomenal returns? So I thought, why not invest? Turned out in my searching that part of the reason people aren't investing as much in Bitcoin is that it's actually pretty hard. Most banks and credit cards won't let you use your money to purchase Bitcoin, and it's just not the most common thing. We're seeing this change more now with Square's Cash App and with PayPal letting its US users purchase Bitcoin. But at the time, the easiest way to purchase Bitcoin that I could find was through the investment app Robinhood. Because through Robinhood, you could invest in Bitcoin, Ethereum, Litecoin, and many other popular cryptocurrencies. And since then, Bitcoin has gone from around $10,000 per coin to what it is today. So since I was investing, I figured I should look further into Bitcoin. And what I found shocked me. You see, over the past decade, Bitcoin has undergone these halving events, which basically means the amount of new Bitcoin created is cut in half. So just from economic knowledge, when supply goes down or gets cut in half, if demand stays the same, the price will go up. So combining this with the other knowledge that I found, that you have PayPal and Square's Cash App, MicroStrategy, Grayscale, Fidelity, JP Morgan, China Construction Bank, a lot of different big name financial groups are investing in Bitcoin. So with the demand of Bitcoin increasing, I figured prices would go up too. We've already seen this rise over the past 6 months from when I initially bought in around 10K, with Bitcoin nearing all-time highs. Now, what really sold me was just how cyclical of a nature the Bitcoin bull and bear markets are. And to look further into this, I looked at the price relation with halving events. So here we have the stock to flow model chart. And what you can see is this increasing red line that denotes the fair value of Bitcoin. This is how much a Bitcoin should cost based on the amount of electricity you have to use, the processor power, etc. So I took a look at the effect of the halving on the stock to flow model. And what I found was that based on the fair value that it costs Bitcoin to be produced, which as of this video recording is around $22,000 to $23,000 per Bitcoin, we are currently undervaluing Bitcoin by thousands of dollars. Currently, the value of Bitcoin sits at around $16,333, but the fair value is $22,700. This is because it actually requires processing power and electricity to run the processes needed to mine new Bitcoin and confirm transactions and collect the transaction fees. So currently, with Bitcoin being valued at $16,000 and a fair value as of the making of this video being around $22,000. It costs more to make a new Bitcoin than it does to buy. So this is like if it costs you $22 to make something, but you could only sell it for 16. So naturally, what do you think is going to happen? People are probably going to stop making that. And if they stop making new Bitcoin, then the supply goes down even more. And if demand stays the same or goes up, the price of Bitcoin should rise as well. Keep in mind that the total amount of Bitcoins can never exceed 21 million, and that there are currently 18,544,175 coins in existence, as you can see right here. And there are still just under 2.5 million Bitcoins left to be mined. So when we do talk about new Bitcoins, we are referring to those that are coming from this pool, and the total supply of Bitcoin can never exceed that 21 million mark. So looking at the stock to flow model, we do see that the fair value of Bitcoin is going to continue increasing until around June of next year, at which point it'll probably start leveling off around $90,000 per Bitcoin. So historically, what we've seen is that the actual value of Bitcoin lags the fair value of Bitcoin by about a month or two. So back in 2017, the fair value of Bitcoin hit around $5.5 thousand in July of that year. But it wasn't until October of that year when the actual value of Bitcoin caught up. And then afterwards, what typically happens is the actual value overshoots the fair value by a sizable amount. Last time we reached almost $20,000 per Bitcoin. So the fact that we again now are lagging the fair value and that we are underpriced, and the fact that this cycle has repeated multiple times in the past, I think it's very reasonable to assume that Bitcoin has a lot of positive upside. There are also some charts, such as the cycle repeat chart that I'm showing now, which show what the projected value of Bitcoin is going to be based on these repeated cycles. So here you can see that they're projecting that Bitcoin will reach an all-time high around $346,000 per Bitcoin in about October of next year. This matches well to the stock to flow model, where we see Bitcoin reaching its more stable fair value at around 80 to 90,000 between June and July. And then it's likely we'll be overshooting that sometime in August, maybe September, and reaching new all-time highs in October, November timeframe. So keep in mind, in the past, when we do see the stock to flow, the fair value being about 5.5 thousand, Bitcoin overshot that by up to almost 20,000. Typically, we overshoot the fair value by about 4x, which means whenever we're over here looking at around 89 to 90,000, we could expect to see Bitcoin peaking out at around 4 times that value, or around 360,000. So keep in mind, I'm still long-term bullish on Bitcoin as well, not just in this next 1 year, where I predict we will probably reach all-time highs by next fall, but in the long term. So one of the things I've found with all of the research I've been doing is it looks like people are projecting Bitcoin to reach new all-time high levels between 100 and 400,000. That's a big range, but I haven't seen anyone think that Bitcoin is going to go any higher than 400,000. That's a stretch. And I don't see anyone who thinks Bitcoin is going to be any lower than that fair value we can see on the stock to flow model, around $80,000 to $90,000 per Bitcoin. After the all-time high, while Bitcoin will likely fall back to or below its fair value of around $90,000 per Bitcoin, it is very likely that it will continue to climb over time due to continued halving events, reducing the new mined coin supply. With cycle repeat and with the previous trends, it does stand to reason that Bitcoin will overshoot the fair value for some time before falling back down and then hovering around it before the next halving event. Additionally, on a longer term timescale, with multiple halving events going on through the year 2100, I think that Bitcoin has a tremendous upside potential. So how do I plan to profit off of this coming wave? Well, typically what we've seen in the past with halving events is that Bitcoin usually goes up by over an order of magnitude. So originally we had the 1K all-time highs, and then in 2017 we hit 20K. It is reasonable to believe that we could hit up to 400K in this next bull run. If the fair value of Bitcoin after this halving event's actions have been priced in is around $85,000 to $90,000, I'm going to be buying in slowly using dollar cost averaging, where I buy a little bit each week. I will hold until it reaches around $100,000, which is more than the projected fair value of Bitcoin. As you can see, there is still expected to be a lot of drops during this bull run. And historically, we have seen pullbacks in Bitcoin bull runs of up to 30%. So by dollar cost averaging, I hope to limit my downside. And then once we reach that 100,000 level, I plan to start dollar cost averaging out between 1 and 400,000. Then, after this Bitcoin bull run has ended and we start dropping again, I plan to start dollar cost averaging in once we reach the fair value of Bitcoin, at which point I will hold for my long-term bullish stance on Bitcoin.